You talked about this wealth distribution aspect, and Willie, it kind of brings it back to what we first talked about, as in maybe Bitcoin or a crypto asset could replace the nation state. You might argue that if you can distribute the wealth to the individuals, you could maybe accomplish a similar goal from the ground up, by actually changing the individuals and their relationships with money. So it's interesting to see all of these things playing out a part in real time as we grow exponentially. Again, it's an exciting future. But one thing I always ask my DeFi Academy students when they're live with me, I say, raise your hand if you got access to Facebook Series A round in 2005, right? Strangely enough, nobody raises their hand. And I'm like, yeah, because you weren't Peter Thiel in San Francisco at the right time and you didn't see that deal. And they raised it 27 million, I think. Of course you didn't. And most people in Silicon Valley probably didn't even see that deal. Fast forward to today, people all around the world can get access to a lot of these budding protocols, via the blockchain. And yeah, there's a lot of things to wade through, and there's a lot of bad things and, bad coins and things going on. But there's also incredible capital markets access to the individual like we've never seen before. When I'm on Wall Street, it's called private equity for a reason. Like you said, rich get richer. And again, strangely enough, all the laws are formulated to not even give access to the individual, right? You have to prove you're a big boy. You have to prove you have more than 100,000 net worth. It's strangely enough, the things to protect us kind of keep the wealth distributed that way.
Exactly.
Strangely enough, right? Strangely enough.
That's not totally divorced from this crypto world either. Like the VCs get the pre-sale, maybe pennies on the dollar. It's like maybe 90% discounted. But, if it's a good asset, a lot of the VCs are mercenaries and they'll dump and get their quick 10x and roll it into the next thing. And then retail come in quite early and they can get the next 100x on it. And so, it's better than what we're seeing on the NASDAQ, where they've done Series G or more and they're valued at $100 billion before it goes to public markets. And so, and the regulations, it's interesting. It's been very much set against the retail investor, but this is where I focused, right? The newsletter has been something I wanted to give institutional grade research to retail investor, and not just I sit on the GP of four hedge funds, and the job there is just to manage capital and make the rich richer, right? And it goes completely against the Bitcoin ethos that I was kind of cut my teeth on in finance. And so I did the letter, and now this is the interesting project that I had for this year, because I think that there's a regulatory path in which we can get retail investors getting access to some of the very best investments in the world at a huge tax advantage and on equal footing to the high net worth. Actually better, because they won't need to hire teams of accountants and lawyers to structure. I'm super excited to do some of that stuff. I think that there are pathways available. You just have to do the work to get it done.
Yeah, it's a great vision. And like you said, it's maybe not fully democratized, but it's moving definitely in the right direction. Still there is access. Maybe the Cantillon effect will always be there to a certain extent. But like you said, when you open your newsletter out to everybody and then you start to standardize some of those contracts, et cetera, you take away a lot of those old barriers to entry. And we're going in the right direction with transparency as well. My daughter's 17. She has a MetaMask wallet. She owns assets for her first time in her life. I'm guessing, Willie, you didn't own an asset until you were way past 17. I know I didn't. When we were kids, the only asset you'd ever own is maybe a piece of real estate. And even that was kind of exclusive to people in the know. Nowadays, people literally change their relationship with money by owning these digital assets and then also getting access. I want to ask you about venture cap, because it's something that's quite curious. Like you said, pre-sale tokens, I think Solana pre-sold for like 4 cents on the dollar into the venture caps. There's lots of pre-sales happening where you can buy the token before it goes on an ICO, IDO, IEO. And typically those valuations are significantly lower. And I think we're seeing a lot of institutions dumping money into these venture cap funds. We've had, Tapio here from Tenti Holdings. I've had Moorhead from Pantera, and, even Scaramucci here, and obviously they're tapped into that money. We've just announced London Real Ventures, and we've done a couple pre-sales, and we're going to have them on the show. And it's really exciting to work with these companies, and they have great ideas. And again, the opportunities are there. But I'm curious, do you see institutions deciding not to go buy Bitcoin, not to go buy Ethereum, and instead channeling their money into these venture funds that are building, I guess they call it the picks and shovels, the infrastructures, the ledger wallets, the Krakens of the future? Is that something you really see happening? And is that something people need to be aware of?
Yeah, I think that's happening because, look, if you look at Bitcoin, I remember the 2016, 2017 rally. That was 100x in 2 years. Bitcoin's currently $1 trillion market cap, roughly, up or down a bit. But like 100x from that is $100 trillion, right? That's near the ceiling. So 100x. It used to be like everyone that like you invested in Coinbase back in 2013 or even earlier, you would have done better just to hold it in Bitcoin, right? You could not beat Bitcoin. But now we're at this point where if you're invested in private equity in a very good company that's at massive growth, you can beat Bitcoin, right? 1,000x versus 100x over the next 8 years. So it really now is an era where it makes sense to build that kind of infrastructure and invest in it, where previously it made sense to invest in Bitcoin. I made one investment in 2016, and that was, I have to say, that was like probably the only investment from that era that beat Bitcoin. They beat Bitcoin by 2x, but I don't think anyone else did in that era. Now we're in this era where it's like, you can comfortably beat Bitcoin doing this infrastructure, and it's much more de-risked from doing that. And of course, the adoption rates, it's like, is it near 26? I think it's 26% adopted in the US right now, and that compares to the mid 50% for people with exposure to the stock market. And so. Yeah, we're in the early mainstream. It's hockey sticking. So there's a lot of people that need that infrastructure. It's the right time to invest in it. It's an exciting time. Yeah.